Jörg Kukies, thank you so much for your time. As we're gathering here in Washington, can I ask you, is the U.S. still a trusted ally?
Yes, absolutely. We are having very constructive discussions with the government in Washington. I met the finance minister in several occasions and meetings here. I'm seeing the trade representative. I'm seeing the economic advisor to the president. Those are all very constructive discussions. Of course, there's differences, especially on trade and tariffs, but everything is going in negotiation mode, so we're optimistic to resolve the differences.
Are you optimistic that a 0-for-0 deal will be arranged?
That would be our preferred outcome. Of course, the United States has answered to the 0-0 proposal on industrial goods that we also need to talk about services and agriculture, but that's the part of the regular negotiation process that we always have. Maroš Šefčovič, the European Commissioner in charge, is leading that negotiation because we've delegated the authority on trade to Europe. But everything is going in the direction of a very constructive exchange, and we're hoping for a deal soon.
You sound pretty optimistic, but a lot has happened in the transatlantic relationship over the past 2 or 3 months. The trust has been broken. Don't you see that? Wouldn't you agree with that? Well, and how can it be restored?
I think for trust to be broken, a lot more would have to happen because the transatlantic partnership has been built over so many decades that we will not get carried away by the statement of tariffs, especially because everyone I spoke to, and I was in Washington right after the automotive tariffs were announced, was that ultimately there is an interest in finding an agreement. So in that sense, we're still negotiating. It's of course, there's different interests, and we need to understand the U.S. side. The U.S. side needs to understand our interests. But this is not the first time ever that the United States and Europe are negotiating over tariffs. So I don't think we're anywhere near a crisis moment.
In the meantime, though, what is happening in the financial markets, and I know you're watching this very closely, there's a flight to safety, and that safety, for once, is the euro. And it's Eurozone assets, and there's a massive loss of trust when it comes to U.S. assets. I'm sure you'd like to see that continue with the euro and the Eurozone being the safe haven.
Well, first of all, I haven't observed a massive loss of trust in U.S. assets because we've seen after an initial sell-off that there has been a pretty substantial rebound. So I think, again, there, for a loss of trust, it would need a lot different type of scenario, and we're seeing markets behaving in a very orderly fashion. Markets rallied quite substantially, and now they corrected a bit, but they rebounded after the correction. So I would say we're quite far away from any kind of level of what you are talking about. And on the other side, of course, yes, as one of the recipients of flows into our bonds, we are of course benefiting that after the sharp increase in the 10-year Bund after our announcement of the debt program, we're now almost back at the original levels, but we're also seeing that happening in a very orderly fashion.
Can I ask you about that new role that Germany's taking on within Europe, leading the charge when it comes to defense spending, infrastructure spending? How is Europe looking at Germany now after that big announcement?
Well, we are getting quite a lot of support from our colleagues because, of course, after the initial market response of European interest rates going up quite sharply by about 30 to 40 basis points, we are now seeing, first of all, that having corrected quite a lot. And on the other side, we are getting a lot of economic institutes, the IMF and everyone saying that this impulse that we're giving will not only be good for strengthening the European pillar of NATO, but it will also be good for growth in Europe because, of course, if we invest 1,000 billion euros in defense and infrastructure, it will have positive effects on the whole euro economy.
But let me ask you though, given that today the German government has come out with its forecast for the German economy seem to be flatlining, and this is a big disappointment given that the German economy has rapidly underperformed the rest of the Eurozone over the last 2 or 3 years. Is there no bigger stimulus that should be expected from the defense spending, or is it all completely offset by the tariffs?
Well, I mean, first of all, the big question on the tariffs is always what do you price in? Because while we're in this 90-day period of negotiations, it's very hard to ascertain what the tariff rates will be because we're still negotiating them, and even more difficult then to ascertain what the impact of an unknown tariff rate will be. So all of these estimates are fraught with a high degree of uncertainty. On the other side, of course, it will take a bit of time for all of the fiscal expenditure on defense and infrastructure to actually be deployed, but we are trying to convince markets and everyone out there that one of the biggest tasks that we're doing in this transition phase of government is to get off to a flying start in terms of passing a budget, passing an economic reform program to increase our potential growth, and to get all of the reforms that have been agreed in the coalition contract on labor markets, on labor migration, on reducing energy costs, on reducing red tape, on reducing the tax burden on investments. All of those things are being front-loaded to be decided quickly so that we get into a motion of more positive growth stories.
But let me ask you, how do you make sure, and this is a concern for a lot of people I've been talking to here in Washington, how do you make sure that the money is being spent wisely, efficiently, it's not hampered by red tape, and it doesn't lead to inflation?
I mean, all of those are the fair points that we're confronted with all the time. We are using a lot of the instruments that we employed fixing our dependency on Russian gas now for the infrastructure, overarching public interest, national security interest, for roads, for fixing bridges. We are setting much faster times to get roadworks completed. We just had a munition factory in Lower Saxony being built in 1 year after the final investment decision. So all of these instruments that we're getting to accelerate the time zone from final investment decision to actual deployment of capital quite substantially, and we have the instruments for that. And we just need to roll them out and to make them used much more broadly. And then, of course, what you say about quality control is absolutely essential, that we take care not only to spend the money quantitatively, but also make sure that for defense we learn from the insights of the importance of technology and artificial intelligence for defense and use that. We have a lot of capacity and a lot of companies capable of doing that, both in the established industry and the startup scene. So the knowledge base is there. We just have to deploy it and use it wisely. But we're putting a lot of focus on that.
A very simple question to you, and one that everyone has been grappling with: how does Germany get its mojo back? Is it exactly that fiscal package that you've launched, or is there something else? Is there a mentality shift that needs to happen? So again, is it bureaucracy?
So the fiscal program is necessary but not sufficient. So it's necessary because on the one side, to strengthen the European pillar of NATO, we need it. For the NATO summit in June, we want to empower the Chancellor and the Defense Minister negotiating there to be able to commit whatever is needed from Germany to strengthen the European pillar of NATO. But on the other side, we also need additionally non-fiscal reforms that will make us capable, now that we have a huge amount of demand coming into the economy for defense and infrastructure, to also facilitate the supply side of the equation. And for that, businesses are giving us very clear signs what is needed for faster growth. It's better tax incentives for investment, research and development. It's the labor market. We still have, despite 3 years incoming of economic stagnation, a quite severe shortage of skilled labor. Then it's bureaucracy, red tape, then it's energy prices, and then it's lack of digitization. Those are the topics that come up over and over and over again, and the coalition contract addresses each single one of them. And we need now the famous 100-day program to implement as many of those areas as possible to give markets and businesses and consumers a clear signal that we're off to the races.
Can I ask you, there's a lot of uncertainty as to your future role in this coalition government. You may no longer be the finance minister in a few weeks' time. Can I ask you, what are your plans and how do you look back on the very tumultuous 4 or 5 months?
As long as you don't expect an answer, you can ask me, but I've said this many times, and I think that's, we just have to ask for about a bit more than a week of patience, because while the process in the parties of approving the coalition contract are going on, there's a clear agreement that personnel decisions will be taken after that, and I have respected that for several months now, and I want to respect it for another week.
Mr. Kukies, thank you so much for your time. Appreciate it.
Thank you.